Today, we are digging into the numbers behind one of the most talked about companies on the planet, Tesla. We're going to break down their revenue, their profits, and their balance sheet to try and answer one big question.
You see, to really figure that out, you have to look past the day-to-day headlines. So we're going to walk through the company's incredible financial journey and see exactly where it stands right now.
Just a quick heads up before we dive in, this is all for educational purposes. It's definitely not financial advice.
So here's our game plan. First, we'll tackle that massive revenue growth. Then we'll see if those revenues are turning into actual profits. After that, we'll check out the company's financial foundation, its cash and debt. Then we'll look at where Tesla is investing for the future and wrap it all up by weighing the company's biggest strengths against its key risks.
Okay, let's get right into it. To really get what Tesla is today, you have to appreciate just how unbelievably fast it has grown.
Just look at that number. For the full year 2024, Tesla brought in almost $98 billion. That is a massive business, but trust me, it did not happen overnight. And this chart, wow, this really tells the story. That is a classic hockey stick curve right there. I mean, think about it. Going from less than $12 billion in 2017 to nearly $100 billion just a handful of years later, that kind of growth is just incredible. So, what on earth was the fuel for this fire?
Well, the answer is pretty simple. They figured out how to build a lot of cars. As you can see here, milestones like launching the more affordable Model 3 back in 2017 and then the super popular Model Y in 2020, those were total game changers. And it was all backed by this huge global expansion of their factories.
Now, selling cars is obviously the main engine here, but that's not the whole picture. What's really interesting is how the other pieces of the pie, like the energy and services businesses, are growing. It shows you that Tesla is trying to build this whole ecosystem around their cars, and that's becoming a pretty significant part of the business.
Okay, let's move on. Making a ton of money is great, but turning that revenue into actual, real profit? Well, that's what proves your business model really works. We're talking about margins.
And this slide right here shows what a brutal journey it was. For years, the company was just burning through mountains of cash. You probably remember hearing about production hell. But then look at 2020. That was the turning point. It was the first time Tesla ever reported a full year of positive net income, and it's been profitable ever since. It shows that as they got better at making cars, their gross margins improved.
But, and this is a big but, it hasn't been a simple, straight line up. Check this out. Net income in 2024 was cut by more than half from the year before. This is a huge red flag for margin pressure all the way from the gross margin on each car to the final net margin. It's likely a result of some pretty aggressive price cuts and more competition in the market.
So, with all that in mind about revenue and profit, let's zoom out and look at the company's overall financial health. A strong balance sheet is like the bedrock of a healthy company. First, let's just quickly define a key term. When we say total assets, we mean everything the company owns that has value. So for Tesla, that's its cash, its huge factories all over the world, all the robots inside them, and of course, all the cars on its lots. This chart breaks down that $122 billion pretty simply. The key takeaway here is the balance between the two slices. That larger slice, total equity, is basically the company's net worth. It's what would be left over if they paid off all their debts. With so much cash and relatively low debt, Tesla has what most would call a very strong balance sheet. So we know the foundation is strong, but a company like Tesla never sits still. Where is it putting its money to drive future growth? This is where we need to look at things like capital expenditures and free cash flow. Tesla is a growth company, which means it invests aggressively. As you can see, it's pouring billions of dollars in capital, or CapEx, into new factories, battery technology, and new products. Now, all this spending affects something called free cash flow, which is the cash a company has left over after all these big investments. And while Tesla's has been positive, it can jump around a lot, which is definitely something investors keep a close eye on. So this story of growth and financial strength is, well, pretty compelling. And if you look at how the market values the company using ratios like price to earnings, Tesla has always traded at a huge premium compared to other car makers. That tells you investors are expecting massive future growth. But that financial story doesn't exist in a bubble.
To really get the full picture, you have to look at the outside pressures because they represent real risks to that growth story. First up, you've got significant governance challenges, which were put under a microscope when a court actually rejected the CEO's massive pay package, raising some serious questions for investors.
And then there's the brand itself, which has always been one of Tesla's most powerful assets, but it's been facing some headwinds. For example, reports from early 2025 pointed to a sharp drop in sales in some European markets, and a lot of analysts tied that directly to the CEO's public activities. That suggests a potential hit to how consumers see the company. And finally, Tesla is dealing with this really complex and growing web of legal battles. We're talking everything from government probes into how it markets its Autopilot system, all the way to lawsuits over factory conditions. Each one of these carries its own financial and reputational risk.
Okay, so after digging into the numbers and looking at the bigger picture, let's bring it all home and weigh the core financial strengths against these very real risks. It's almost like a tale of two Teslas. On one hand, the numbers paint a picture of a business with some undeniable strengths, that explosive growth, massive scale, and a rock-solid balance sheet. But on the other hand, you have these significant external pressures that could absolutely impact its future.
And that brings us right back to the question we started with. Is the business actually getting stronger? Financially, there's no doubt its operational engine has become incredibly powerful, but its path forward seems to depend less on just making cars and a lot more on how it handles all of these turbulent, non-financial challenges.